We know that the facade stability is a deception. Declining inflationary figures mask an imminent perilous financial collapse compelled by the excessive state exemptive overheads and the obviousness of the restrictive credit conditions. Do we care about the potential secular stagflation risk, inflation, recession, feared insolvency crisis, deflation, quantitative easing, unemployment, retail, food inflation, and balance sheet asset reduction, fiscal and disciplinary expenditures, inflationary progressive aggressive incentive, rate hikes, negative unsustainable deficit ratios, economical fundamentals, owners equivalent rents, or appraisal surveys, mortgage principal cost and induced inflation confidence. CPIs, non-farm payrolls, math is not mathing. Inversion of the yield curve and also the prime lending rate, which is currently at 12%. That's all I basically care about. So the complacency of the white collar professionals playing cat and mouse, those are the ominous signs which unravels the inevitability orchestrated within our reality. The heightened interest rate have already led into the most stringent credit standards and susceptible loans demand from prospects and business. And the recent geopolitical tensions, which is the prime evident, it's actually additional to the peril. And what's also evident is basically what you would see in the DRC and also Northeast Africa as well. So, and within the next coming month, you would evidently also see this unraveling in the US as well. So, this is what you would generally would have in your dissertation or inferences to your criteria. So, in addressing the elephant in the room, which is basically the impending financial collapse of 2024, the normal positions of the business volume has been reached, and the curve of the business cycle has slowed down from the transition period. And generally what you would have within your criteria is basically depression, war crops, and depressed bonds values and the stock market prices. And the economy will only recuperate in the year 2026. Unemployment rate will increase, geopolitical events, the financial structure will be exacerbated. Once again, to reiterate this is what you will generally have within your inferences of your overview criteria. Nevertheless, what's indispensable is basically the inversion within your asset class of your investments. We do not care what happens to the economy. The more chaotic, the more chaos, the more predicament there is to it, the more money I make. So there is, nevertheless, what's more indispensable, as I pointed out, is basically the inversion, which will definitely be more explicit within the next 2 months. So we know this months or years, weeks, months, and days prior to actually happening. We know exactly the date when the collapse will happen. We know exactly the price prior it actually happens. So we know exactly the date. That is your inversion right there. So whatever the outcome, even if within your outcomes of your dissertation, it doesn't depict what you basically would have to infer, nevertheless, the inevitability to it is that their collapse is just in your doorway. So it's inevitable, it's inevitable, it's inevitable, it's inevitable, it's inevitable. We have a financial collapse and it begins in 2024.